This is going to be the first video in our playlist, and we will be learning about market structure in this video. Okay, so in this chart you will first make a low and the price makes a high, and in this swing it will come down to 0.5 or any fib level here and then have a pullback. Again from here it will start going up making a new high. Again it will come down for a pullback and the price makes a new high. So in order for a price to go up, right, it will be making higher highs and higher lows, and the price will be going up. And when the market is in a downtrend, it will make a high, low. In this swing, again, it will have a pullback. The price will go up to any particular zones here, and then it will make a lower high. Why is it called lower high? This is the high, and then the price did not break this high, right? It made a lower high. That is why this is lower high, and then the price made a lower low. This is our low. The price went below this level, so it's our lower low, and then our lower high here. Okay, so this is how a downtrend would look like, but this is not how simple your chart is going to look like. This might be a higher time frame in 4 hours or in a daily time frame. This is how it's going to look like: higher highs, higher lows. After the price has made this pattern, it's easy for you to say, okay, this was a high, this was a low, price went up. But when the price is actually there and when you're looking for a trade, this is not enough for you to identify the zones in the market, the reversal areas in the market. Okay, that is why it is important for you to understand the internal structures that we have. So when you get into the chart, okay, this is not how your structure is going to look like, but rather it is going to look like this. Okay, it first goes up, has a minor pullback here, and then again makes a new high. Okay, and this is gonna be our important level of inducement here. Once the previous inducement has been taken out, then it's easy for the market to go up and make a new high. Already we have learned the concept of liquidity. If the market has to make higher highs and higher lows and go up, which side is it going to trap you? It will be trapping you on the lows. Okay, this previous pullback or the inducement level is going to be where your liquidity sweep happens. So all these people who are entered here or here, where do you think the stop loss is going to be? It's going to be below this previous low, right? So what happens? The price comes down, sweeps this previous low, grabs all the liquidity here, and only then it can give you a strong move. If it is not taking this impulse, the probability of the trade is going to be very less, because the liquidity has not been swept. So the move that happens cannot be as strong as it is. Okay, so here you can see to this inducement level, again the price started going up. In this structure also you can see we have this as our previous pullback. It has been swept, and then again the price goes up. So every time a price makes a BOS, breakout structure, it needs to take this liquidity. Okay, in order for you to take a trade or understand what's happening, where it is trapping people, where the liquidity has been swept, you need to get into the smaller time frame. So the blue line that you see here is internal structure. Okay, what is happening in a smaller time frame, and the white and red line that you're seeing is on an external structure, higher time frame. Now we have breakout structure. I've already mentioned breakout structure. In a basic market structure, we do not have any term. Okay, whenever a higher high has been made, we don't have any term. But here, every time a price breaks the high and makes a new high, it is called as breakout structure. Okay, so it makes a new high, it breaks in an uptrend, it is breakout structure. And when the low is, or in this example you can see, when the low is broken, when it makes a lower low, this is also a breakout structure. And the next thing is inducement. We've already learned about it. So in order for your move or your trade to be a valid one, you need to see if the liquidity sweep has already happened. These are the conditions you need to remember. Okay, first the price makes a new high, condition 1. Then it is going to sweep the liquidity that we have underneath. Okay, we have already said the previous pullback is going to be the liquidity pool. Okay, condition 2. And then the price has to make a new high in order for this to be a breakout structure, and it needs to give a proper close. It cannot have a sweep or a rejection candle, but it needs to have a good candle close here. That is when you can call this a breakout structure. Okay, and then in order for this to be a valid low, it needs to break this high, previous high, and give a strong close here. Okay, so you have already understood the conditions for breakout structure. We have also understood the conditions of inducement. Let's cover the last topic. So this is every time a price keeps making higher highs and higher lows, the previous low in uptrend is going to be very crucial for you. Whenever the previous low has been broke, that's been crossed, okay, by red candles, it's time for you to understand, okay, the market shift has happened. So this gave a good move. This was the maximum the price has gone to, right? And the previous pullback is this. No, this is our minor pullback. The previous low we have is here. Okay, this is our major level. So this is called as a change of character. So you can also call it as a market shift. So whenever this happens, we would be waiting for the price to get into the zone again of order block or any other entry areas here, so that we can look for a short opportunity. Okay, so let's see one or two more examples of the same. In this example, you can see the most previous pullback that we have. It's this. You can draw a zone. You can see it has already been swept. So this is our inducement. Okay, that's been done, and this is the maximum the price had gone to. You can see later it gave a proper close, and the candle was a strong candle here. So whenever your liquidity sweep is already done and the market also gives you a good strong close like that, this is called as a breakout structure, right? So this high is going to be higher high, and this low is going to be my higher low. From the breakout here, you can see this is one pullback that we have, okay, and you can see the price did not come down to this level, but rather started going up. So in this move, which is a valid pullback here, this point, right, it has made a new high, and this was our valid pullback that has also been swept here. So we are going to mark our inducement level first, and then this is going to be our high, and wait for the break of structure to happen. Then you're going to mark this as your higher high, and this as your higher low. So once you start marking your structures like these, okay, first looking for a inducement and then waiting for a break of structure, looking for conditions like this will put you way ahead in the market. So let's see one more example on the sell side as well before we end this video. Here, let's say this is our high and this is our low. Okay, in this low, this is the low the candle has made. This is a valid pullback, right? You can see a sweep happening. There is a candle that went up and then swept, came down. So this is our inducement, okay? And then the price came down again, made a new low here, okay? In this leg, you can see the pullback candle is this red one, right? Because it crossed the previous candle's high, okay? This is our inducement level. And then this low breaks. We have already seen whenever you are in a downtrend and the low breaks and the price makes newer lows, it is called as breakout structure. Okay, so this was our low, this was our lower high, again lower low, lower high. Okay, then the price comes down. This is the most recent pullback, but the price did not go up to that level, and then it never took out any previous pullbacks here. The price came down to this level. Okay, and this is the most recent low high the price has, right? And from here you can see this change of character. Once this has been taken out, you can wait for the price to go down to any of our breaker block, order block, fair value gap, or any entry based things here, and then you can look for an entry here. Okay, so in this video we have already covered about breakout structure, inducement, change of character, how your external structure would look like, how your internal structure would look like, how a liquidity sweep happens on an uptrend and in a downtrend, right? So we have covered all these topics for today. Yeah, I think that is it about this video. If you have liked the video, hit like and also do subscribe to the channel. Thank you.